start my speech in 3, 2, 1. The current tax code on capital gains and corporate income is an archaic, Byzantine, and impossible to navigate system, which is manipulated by the wealthy to preserve their ability to avoid taxes to the detriment of the rest of the economy. We want to change that. What's our setup? First, we're fine with maintaining a basic income tax, although we do believe, and we'll give reasons later, that the rate of income taxes on personal income, like what you get from work, will be lower. Second, we will have a system of public registry. So for every asset, you will list the price that you are willing to be taxed at and sell at. This will be collected in a big online database, and anybody can access it for free. Also, we will require for assets of a certain value a certain level of disclosure. So you have to explain what the asset is. You have to provide some basic information, sort of analogous to how a publicly listed company has to give shareholder reports. Obviously, it would be less extreme than that, and depending on the value of the asset, there would be more reporting. The final thing we want to point out is that in terms of residential real estate, we think that there would probably be a soft social norm against just buying up somebody's house when they're strongly opposed to it. This isn't a very strong social norm. If somebody's being genuinely intransient, or it's clear that they're abusing the system by saying that their house is worth much less than it actually is, then people will feel fine about buying it. But if it's an edge case, people will probably err on the side of not being really mean. We don't think this applies in commercial dealings because there's much less of a sympathetic actor involved. We don't think this is a huge thing, we just think it mitigates some problems. First, on tax revenue going up. We think that tax revenue increasing is very important. First, because tax revenue is more equitably distributed than general economic growth, because the government spends that money, generally speaking, in a progressive way. So 1 unit of tax revenue increase helps more people than 1 unit of growth. Second, because macro stability is very important. The ability to pay your debts as the government, the ability to fund long-term investments is dependent on a stable and growing tax base, which is increasingly coming under attack in many parts of the world due to things like high levels of inflation, which have caused governments to spend even more, massive amounts of spending during COVID, which are still being paid off, and the rise of right-wing populism, which generally combines large amounts of public spending and tax cuts without being able to pay those things back, right? So think about the Big Beautiful Bill, for example, or other sorts of economically populist programs. There's plenty of governments around the world, including the United States, that could benefit from a more rational tax system. So why do we collect more taxes? The first thing I want to clarify is about the difference between flows and stocks. So a flow is a thing that changes every year, right? So corporate income is how much extra money you gain every year. Capital gains is how much extra value your capital gains increase, right? Stocks are the total level of something. So what is the total value of this company? What is the value of this house? What is the value of the stock? When you tax the stock, it's much more than the level, so you can charge a much lower percent tax in order to achieve the same level of tax revenue. I just want to clarify that. So you're not going to be paying a very high percentage on your declared value because you're taxing so much more value, the percent has to be a lot less. But I want to point out that also this allows us to do things like lower income taxes by just raising the level a little bit. This is good because income taxes are generally regressive, and for ordinary people, most of their wealth comes from income, whereas for wealthy people, most of their wealth comes from the wealth that they own. So it's less regressive. But second, why do we actually collect more taxes? We think that there are much lower collection costs. On our side, all of the costs are imposed on the person who's paying the taxes. You have to declare the price, you have to provide the information, and then the calculation of the tax is very simple. It's just a percent of the price that you declared. There are very low costs to doing this. On their side of the house, they have to engage in expensive efforts to audit these properties to assess their true value. You have to find different algorithms to figure out what is the real accurate value of this house. You have to there's all sorts of Byzantine tax codes and sort of different legal requirements that make it so that you have to spend much more manpower figuring out what everybody owes. And what this also means is it's much easier to cheat the system because any individual company that gets a lot of IRS scrutiny will probably get caught for some tax fraud, right? But the problem is that there's so much of these companies out there that the government tax collection system is generally not capable of catching all of them, or if it were, it would have to spend a lot of money, which would substantially cut into the tax revenue, which would then lower the ability to collect. Also, there's all sorts of ways that wealthy people can play legal games, like, for example, hiring expensive lawyers to challenge the interpretation of tax codes, delay things in court. The complexity of the regulation allows for this to happen, and because an individual corporation is willing to spend much more than government is willing to spend on any individual case, like if $100 million are at stake, I'm willing to spend up to $100 million worth of lawyers to prevent myself from having to pay that tax. No. So we think that in many cases, it's just much harder to collect taxes on their side. We do it much more effectively on our side. I'll take a point from closing.
Weighing on stability, I think that if you have these huge companies being able to become more profitable here, don't you think that means more lobbying from companies and therefore less stability?
But I mean, what are they lobbying, right? The tax system is the tax system, right? Like, there's lobbying on your side because there's all these like little arcane regulations that you can tweak a little bit that ordinary people don't know about. But on our side of the house, there's just like the percent, right? It's like it's a one flat percent for everybody. So changing it is very public and very visible, so it's much harder to lobby. That's another mechanism. Second argument on the effectiveness of the incentives that we create and economic growth. First, we allocate private property and capital much more efficiently on our side of the house for the simple reason that people declare the true value of what they actually own to themselves. Because if they declare less than the true value to avoid paying their taxes, then somebody is going to buy it from them at the price, or somebody might buy it from them at the price that they declared. So if the true value of a house is $100 to me, and I say $50 to get money off of my taxes, somebody's going to be like, hey, that house is actually worth $100. I'm going to buy it off them from $50 and then flip it. So you have an incentive to accurately declare what the true price of your thing is. The reason why, what this means is that capital naturally flows to whoever can get the most value out of that capital, which is efficient economic allocation. The problem on their side of the house is that information is not perfect. Think about the vast amount of small businesses and factories and houses across the country that don't have like publicly listed prices or that aren't for sale. So there's all these underpriced assets that just like people don't know are out there and don't know could be a part of a subject to a positive sum trade. But also you lower the transaction cost of doing so because there's no negotiation that has to happen. You just pay the listed price. Lots of negotiations are expensive and also deals fall through even though a deal could have been made because people are intransient. So you get much more economic efficiency in allocation. We're very proud to stand in opening government. Should I stop the recording or just keep it going? Okay.
Thanks so much. Hello.
Okay. Starting in 3, 2, 1. Two arguments from the opening opposition. Firstly, we're going to explain why this massively increases corporate consolidation and puts average people at massive risk. Secondly, we're going to explain why this massively reduces small companies to innovate in critical sectors. Before that, I want to deal with some extraneous rebuttal regarding some of the material that we heard from the opening government. About half of their speech was talking about things like tax fraud, how we're not getting enough taxes, or in some contexts, perhaps taxes are too high. I have two responses. The first thing I want to note is that this is a policy motion. Presumably there exists an equivalent amount of fiat that we can apply to other things. So insofar as there exists problems with the current tax system, we can use that fiat to address those. But secondly, even if it's the case that they give some rebuttal as to why addressing those problems might be intrinsically difficult, I want to note that there are existing incentives in the status quo to navigate these problems. Why? Firstly, we say that, for example, lowering taxes in general tends to be a relatively popular political policy. There's a lot of people in society who support this notion, so there is an existing incentive to pursue that if it's something that they find valuable. But the second thing I want to note is that to the extent that existing tax systems or rules are convoluted, we can presumably hire people to fix those loopholes, and we think that there's an incentive to do so because governments don't look good when they make the tax system extremely complicated. I don't see how any of that material was intrinsic to the specific motion that we're debating. I don't think it can be weighed in the debate. What is the contribution from opening opposition? Our claim, broadly speaking, is that in the status quo which we are defending, we have different taxes for different purposes. So for example, we have capital gains tax or corporate taxes which we apply to large, wealthy businesses because those are the companies, for example, that actually have capital from which they can gain or corporate revenue that can be taxed. We have property taxes that, for example, apply to average people, for example, homeowners, who can pay a portion of their home's value in order to do things like fund municipal services that they require. We have intellectual property as a different category because we recognize that intellectual property is something that is important to have in society in order to give companies the incentive to, for example, put up the upfront cost that it requires to innovate a new product. What functionally happens on side government across the bench is that there now exists a number beyond which you pay that will give a business who can pay that number access to all of those assets. This is a massive problem. How does this lead firstly to corporate consolidation and why is that bad? I want to characterize these large conglomerates versus smaller parties whose assets they will be buying. A few things to note. Firstly, conglomerates have large cash reserves, which means they can use those cash reserves to go into a market and just buy existing assets. And the reason that they have large cash reserves is because they're conglomerates and presumably they don't spend all of their money all the time. And you can look at their existing cash reserves. It's publicly reported. This is just a true thing. The second thing I want to note is that they have expertise in these industries because they are companies that can hire professionals to research, for example, the most profitable markets that they want to invest into. Thirdly, they have constant revenue flow, which means that even if it's the case that the economy goes on a slight downturn, the fact that they are so spread out over large industries makes them somewhat resistant to taking large risks, for example, which we think increases the incentive and their capacity to buy a lot of assets at the same time. Fourthly, we think broadly speaking, there is an interest of these conglomerates to expand because of the profit motive. You want to outcompete your competitors, and therefore this sort of competitive nature of rising to the top is something that persists across all industries. And finally, you have legal resources to do things like fight court battles in the instance that you're being sued for doing this improperly. Why is this characterization important? The only preemption that we get, unbelievably to this, is the mechanism of like this invented social norm that they assert companies won't do this well. I mean, guys, come on. Firstly, this is just an assertion. There was no structural analysis as to why the social norm is likely to happen. But I'd say, secondly, this is undercut by their own analysis. They talked about that this is mostly applying to corporate behavior. I have news for opening government. There are large real estate corporations that have a massive interest in buying up a bunch of homes in the area so they can connect, so they can acquire constant rent flow on those properties. We think that the profit interest and the profit motive, the fact that these people are selfish, applies to corporations who then have access to lots of wealth. We don't think that the social norm analysis is likely to stand. What is the characterization, therefore, of small parties? Why can they not fight back against this? A few things. Firstly, we think they lack information. Most people don't think about, like, for example, their home all the time. They think they have other things to worry about, like their job, their kids, their family. They don't have critical expertise in terms of navigating, like, the most optimal number to value their assets at. But the second thing I want to point out is that they have limited resources, and critically, they have limited resources in the area of assets. You might have, for example, some degree of, like, money in your bank account, but most people only have, if they're lucky, one home. What this means is that they're at a much higher level of risk because once they lose that home and it enters the rental market, it's very, very difficult to get it back because property prices go up. Third thing, most people are risk averse. They realize that losing their home or like just losing things that they have is a massive harm because it affects their livelihood. They'd rather be investing money into themselves than into the rental market. Why is this important? What this means is that the incentive exists to price your assets extremely, extremely high as you can. Here's the problem. You can never price your asset at a number that is higher than what a company will be willing to pay for it because these companies simply have vast more economic resources than you do. I'll take a point of information in closing if there's anything.
Do you think the average person would enjoy the ability to sell their house for $100 million to BlackRock?
Yeah, so like presumably, but I think that BlackRock is, I don't know, smart and they can figure out what the optimal number is. The whole point of the analysis that I'm giving is that there exists information asymmetry and also capacity asymmetry for BlackRock to give the most enticing number because you simply can't price your home high enough to prevent them from buying it. If the preemption to this is going to be like now that everyone has $100 million, I just don't think that is reasonable because there exists this asymmetry. And here's the final mechanism, and this is extremely important. It might be the case that these conglomerates are going to be paying initially a high number upfront for these assets, and presumably people can use that. But we think over time, the long-term impact of that is that you then get massive consolidation into things like the rental market because they can get that revenue back. So the sort of existing capacity of these companies means that they can always get more money than the average consumer in long term. What is the impact of this? First, we think broadly speaking, corporate consolidation is bad because it eschews wealth from the people in the middle and the lower class up into corporations. It's very difficult to get that back. Second, we think this is really, really bad for instability. Why is this the case? Because if you want to price your asset so high that it will never be taken from you, then guess what? You have to pay the corresponding tax. This encourages people to do things like go into debt in order to float those payments as long as they can. Here's the problem. If it's the case that everyone is doing that, all of a sudden you create this massive debt bubble whereby people can't get out of that because they're now stuck with these taxes. The consequence of this argument is that people have less money, and in the event that they sell their assets, they then can't get that back and build wealth over time, which we think is a fundamental aspect of living a good life. My partner is going to talk about research and development. Proud to oppose.
Thanks so much. TPR.
Okay, before I start, I'll take a POI around 5 minutes. Okay. First, expanding on the opening government's case, and then addressing the OO, a bit of the CO, and explaining why the opening government ultimately wins this debate. So first, we want to tell you that having this fixed rate doesn't mean that there is a single rate that has to apply to every single type of asset. More likely, we would have 5 to 6 different rates, one fixed rate for each asset class. Next, we want to explain to you why this tax selection is going to look structurally cheaper. The system is going to be structurally easier to enforce because there's just a fixed rate applied to these assets, and you self-declare the value of the asset in a way that is much easier to enforce because we know that the people owning the assets have the incentive to price them accurately, or else they will not be able to hold onto these assets. Why is this comparatively so much better than the status quo? In the status quo, either one, you have to self-declare some types of assets but have absolutely no incentive to be doing that accurately, or two, the government has to necessarily send people to go survey that property themselves, which is necessarily more expensive. Note that while the opening opposition tells you that we can simply reform inefficiencies or things that make it easy to exploit loopholes in the tax code, these two fundamental facts of lack of incentive for accurate self-reporting and the necessity of surveying property that necessarily entails high costs of sending personnel, etc., can never be eliminated in the opposition world, which is why it is exclusive. Next, emphasizing why this is so expensive to put in place, because when you have to assess the value of these assets, additionally the equilibrium price is not visible, which is an overall harm to allocative efficiency, etc. If we have people self-declare, owners can lie to evade taxes, etc., and corporations can do lots of tricks to manipulate their tax burden, like reclassifying one type of loss as R&D in order to get it exempted, etc. These things are very hard to audit, and these audits will necessarily cost a lot of money, even if you try to have some kinds of reform. Secondly, emphasizing the importance of the allocative efficiency. When we have the assets flowing to the people that are the most productive owners of the assets, then they are used to make more output, which will effectively mean that we get more utility for people in society, that we are able to bring more profits and more human well-being, etc. For example, if a factory can be retooled to produce a good that is more desired by consumers rather than one that is currently not getting as much buy-in or as much demand from people, we think that ultimately this is a good for consumers because they're getting this profit either by managing assets more efficiently, not having as much waste, or by producing something that there is more demand for, and in either case, we think that this is better for consumers on the whole. Okay, additionally, I want to add a mechanism on how this raises the tax revenue. So in addition to being able to collect taxes more efficiently, there are also new asset classes that are added by this policy, specifically in the world of intellectual property. So for example, if you are Disney, the fact that you have the copyright on Mickey Mouse is incredibly valuable to you because it allows you to sell tons of toys, get streams of revenue from like licensing, etc. And so that will be worth a lot to you. You will want to price it really, really high because in addition to the inherent value of it, if someone else, like if Universal were to buy it, this would be a detriment to the rest of your brand. So necessarily necessarily you will price it quite high and be paying quite a lot to the government. We think that this is something which on our side of the house uniquely gives us a new stream of tax revenue, and we think that this is really, really good for all the reasons that David gives you, and in human terms, because these taxes are likely to go to things like social services, to mitigating some of the worst harms that the opposition may tell you when people are suffering. This will be addressed more when we have more tax revenue to be able to provide these services. Okay, let's do some addressing of the opening opposition. I already told you why their points about tax fraud do not stand here, and then they also talk about how conglomerates will be buying everything up. Okay, so first we tell you that in the cases where a conglomerate is, for example, buying a factory or buying a commercial asset, we tell you that all of their mechanization is essentially government material. Because if this corporation has decided that the value of the asset to them is greater than the sale price, that means necessarily that they have evaluated that they can get more value out of that asset, and that is ultimately a good thing for the economy. Additionally, on this issue of houses, they say, oh, well, you can never price your house as high as BlackRock would be able to buy it for. We tell you that actually you can price your house at a rate that, you can evaluate the value of your house to be something that is high enough, because you don't have to pay all of that yourself. You just have to pay the tax rate on it, and the value of your house to BlackRock is not infinite. The rental market is not the most profitable compared to, in contrast, when you have developing, there's a lot of added value that a developer gives to a piece of land. But an already existing house requires things like ongoing management of the property, dealing with tenants. You have to pay for utilities, fixing when there's mice and stuff. It's not like BlackRock is going to want to buy your house for $2 million if it's actually worth $500,000. We think that this world of everyone's houses being bought up is extraordinarily unrealistic. And so we think that this probably isn't going to happen. And in the case where you are getting some huge amount of capital, if it truly is worth more to them than to you, then you will be getting a lot of capital that you can then use to buy a house, which is also worthwhile to you and will also allow you to build wealth in the future. All of the benefits that come with the house, you will still be able to access on our side of the house. I'll take closing. Okay, opening?
The comparative is that individuals can't float the payments that they are required on these taxes. So if they value their house at a very high number, they can't afford that, which puts into the economy this instability that we were talking about.
We think that the margins of how much more you have to pay for your house is not something that's going to put an individual into a huge amount of debt. If you value your house 1/5 more, then maybe you have 1/5 more taxes, but it's not $100,000 more taxes. And we think that given the other benefits elsewhere in terms of how you'll be getting probably lower income taxes because of how this changes the flow of tax revenue to the government in general, we think that your ability as an individual to pay taxes as a whole will probably not be very much changed. As we already showed you, income taxes decrease. Finally, I want to quickly preempt the CEO when they talk about lobbying. Essentially, they're just saying lobbying would change it back to their system, which to the original system, which they're saying is bad. We think this is just more explanation of why this new system is going to be so much more beneficial. Okay, so finally, I want to do some emphasis of why our points are so crucial and so important. We think that when we have this point about allocative efficiency, what we're ultimately getting is an economy that is the most responsive to the needs of consumers. We think that we are getting the most productivity with the capital that we have, which is a good thing for the economy as a whole, because when we have economic growth, we are improving people's quality of life. We think this is also responsive to issues about research and development, because we have more capital available to then invest in research. We don't think that there is a significant disincentive into research, because we are only having things at the value that they actually are worth to the companies. So your intellectual property will still have a value. There will still be people who choose to invest in it. Even if the intellectual property to a new drug gets bought by someone else, it will still have the value of that cost that the company gets to you. So we think all of these incentives are still there. We think that all of these taxes, or the increased tax revenue, will be very good for the citizens in general, and we are so proud to propose.
Thanks so much. Felix?
All right, I'll start my speech in 3, 2, 1. Oh, sorry, one quick thing. Sorry, if you can just do non-verbal POIs, please. Okay, sorry. 3, 2, 1. Okay, panel, a couple things I'm going to do for you first. We'll go through both OG speeches, and then I'm going to clear up our case for you and leave you with kind of a nice bow about why OO is going to win this debate. So starting with PM, I think first of all, I can just really quickly address this. Like, residential home sales will have a soft social norm against it. I think that's kind of bullshit. Like, people in the housing market, especially today, are out for entirely their own self-interest. So, like, even in the residential scale, they're not going to care. And then especially once we talk about, like, companies getting involved in this type of real estate, they're obviously not going to care about whatever social norm exists. So I think that kind of, like, falls out of the round. Kind of a bit of, like, a burden trick that just doesn't really work. Then they talk about how this is going to increase tax revenue, right? I think basically the crux of this point is that people are going to recognize that this isn't taxing them as individuals quite as much as they are under the current system. Therefore, they're going to like be okay with these being higher and collecting more tax revenue on net. I think what takes this out is the same problem that has stopped like wealth taxes from being implemented in a lot of the world, right? People always think they're going to be rich one day, right? People always think they're going to have all these assets at some point in their life, and they're going to want to keep taxes lower, right? People advocate for lower taxes even when it is not in their own personal best interest. This happens time and time again. So it's unclear to me why some politically incented government is not going to still try and keep and reduce these, so you don't really access a lot of their increased tax benefits right now. And again, there's really no delta here, because if you really wanted to increase your tax revenue, you have the political levers now to do it in any number of ways, right? If anything, you're reducing your options. You now can't do it in the form of a capital gains tax or something like that. You have to do it through this one tax that has taken all of the other ones. Then they make this point about kind of like flow versus assets, right? And how you can like charge a lower tax rate because assets are like a larger amount of money. That is true, but I think one important thing to recognize for this is that generally it is large companies that make money off of this type of flow, right? They make a lot of money off of their investments, they make a lot of money off of this like capital gain flow, and that's stuff that's not being taxed now anymore. It is their asset base that is just being taxed. And for a lot of smaller consumers, it is their assets that are the majority of their wealth, right? You look at people who a lot of their wealth is bound up in their homes, right? That is the largest part, and that is now being taxed in a way that is going to be higher than it's not right now, right? Because right now there's just property taxes, but now this new tax needs to take the place of property tax, corporate tax, all these types of things. So inherently, the rate on that tax is going to have to be higher. They make a big point about how like much easier tax collection is going to be. I think just like on weighing, like the CRA and IRS as like portions of their respective governments are relatively small. Like this is not a huge cost burden right now for governments, and fundamentally there are always going to be these large companies that are willing to throw whatever lawyers at whatever laws exist, regardless of what the tax law is. There are going to have to be, like even concede, there's going to have to be like different asset classes. Imagine the fights that are going to be had about whether something falls into one asset class or another, right? There are going to be a lot of ways in which this is still going to be a tough thing to maintain. People are always going to try to exploit taxes, right? And then finally, they talk about, in the PM speech, like how capital naturally flows to where it should be. So panel, what actors are actually going to be able to leverage this? Ben gives you the case for why it's just big corporations, right? And I'll expand and clean that up in a second here. So I want to get into this idea of intellectual property and research and development. Because they basically tell you that like this is going to create this whole new tax flow for the government because now these things are going to be taxed in a way that they're not currently right now. I think there's a couple of problems that I want to talk about with this. So let's take their kind of best case of talking about like big companies like a Disney with their own intellectual property, right? A couple of things. First of all, if you look at a company like Apple, right, they currently host a ton of their IP abroad in a country like Ireland, right? It is offshored so that they don't have to pay those taxes. IP is not a physical, tangible asset. It gives companies a lot of leverage to be able to kind of move that around and play games with that as much as they like, right? And again, who's going to be able to access the type of lawyers and the type of like different accounts and like business structures that you need to be able to offshore assets like this? It's going to be the big companies. It's not going to be some small startup that's started in someone's garage. Their IP is going to have to be left onshore. They're going to be at a significant disadvantage. Another part of this is foreign competition. You're already seeing companies in like the US, the EU, Canada being put significantly under threat by the lack of respect for IP by other countries, like namely China, right? That is only going to get worse in a world in which this IP is being taxed at the rate that they're saying it's going to be taxed at, right? This is going to disadvantage companies in these countries that apply this tax against foreign competition, right? And no government is going to want to be in the position where they're disincentivizing their own research and development internally to their own company, right? And then finally, it creates consolidation, right? If you can only hold on to IP because you have enough money to pay the tax and just value it way up so that people aren't able to buy it from you, you are inherently going to be a really large company that is not, that is able to hold on to all these types of things. Yeah, I'll take closing if you have one.
Why is it not likely that there's going to be a progressive taxation system? Like you have a lower tax rate for residential housing, for example?
I mean, the motion, I don't have it in front of me right now, but it was pretty clear about it being broadly applied across the board. And even within like certain asset classes like residential property, there's still presumably going to be a ability of companies to be able to purchase those types of things, right? So all of our impacts still necessarily apply to that, right? So let's get back into rebuilding our case here a little bit. Let me make sure I didn't miss anything from up here. I think it's important for me to address this idea that we hear from both gov teams about how like you can just like price your housing up and then like, you know, BlackRock's not going to buy some random single family house for $100 million. I think there's a couple of things, right? First of all, they're ignoring the fact that you have to pay a tax on this. There's only a certain like range that you're going to be able to price your house up to. They try and like put in these kind of weird, just asserted mitigative things that like the tax isn't going to be that high. But realistically, you look at a lot of people, especially with the housing market where it is today, that are house poor, right? They don't have a lot of additional money to be put on that's not already going into their mortgage, it's not already going into utilities, it's not going into all these types of things, right? So their ability to go and price up their house to make it not worthwhile for a company that might be looking like Prospect, that's looking at the increasing value of housing over time and would want to be able to do that investment. They have the capital to be able to push you into doing that, right? So this just really allows for this type of monopolization of resources. So let's get back to quickly rebuilding our case from side 00. So we've given you a lot of structural reasons as to why large corporations are going to take advantage of this and are going to box smaller actors, the majority of actors, the vulnerable actors, out of the market, right? First of all, Ben tells you they have access to capital, right? They can buy essentially whatever they want, whenever they want it. They are able to be more forward-looking, right? If I just own my house, I'm not able to be like, oh yeah, in 20 years, like the value of my house is going to go up. Therefore, the economic incentive is for me to price it up so that it doesn't get bought out. I don't have the money to do that. I don't have the money to pay the taxes today. That's what matters for me. For a large company like a BlackRock, they are able to, it's productive time, they are able to do that kind of prospecting. They're also able, they have the resources to be able to have like large accounting teams who go and do all this research in these markets, right? There are millions of assets out there. If you have a big team, you're able to go find the best valued assets. You're able to go take advantage of people who didn't have the resources to value their assets properly. You're able to do arbitrage opportunities where you find pricing differentials and just be a leech on the economy by buying and reselling straight away, right? That provides no value. That takes money away from all these vulnerable actors. For all those reasons, very proud to oppose.
Thanks so much, MG.
Is everyone ready? In opening government's world, people aren't able to own houses, small businesses immediately get consolidated. But this is not the government bench. We are going to save the government bench with closing government's extension. Two main parts here. First of all, why a progressive taxation system is actually the likely manifestation of this type of tax. And then secondly, why assets are going to be used and actually why they're capable of being taxable. Because opening government has some nice claims, but they're all very thoroughly refuted by opening opposition. We're going to actually respond to the opening opposition claims, taking them down in the process. So, why is a progressive taxation system more likely under this motion? Why is it likely that the government is actually going to want to make this a thing that exists? Well, first of all, fixed taxes can still include progressive tax rates. It means you just maintain a constant level of tax, but for different brackets. This happens with income tax, where your income is is taxed at a fixed rate, but depending on how much you make per year, you get charged a higher percentage on this certain extra amount of income that you earn. So given that this system already exists, I think that it's fairly likely that the government's going to implement this in any tax system that they use to replace a pre-existing tax system that was progressive. Secondly, the government has a very clear incentive to not fuck over every single person. Why is this? Well, most governments are democratic, they get voted in. If they're not democratic, I think you're probably going to have a very difficult time controlling your population if you don't let any of them own houses with any modicum of stability. So the government has an incentive to make sure that people are able to maintain their property, but they're still able to extract similar amounts of revenue from property taxes. What they can do is set the rate incredibly low for residential housing or for people's primary residential house, set that rate incredibly low, like 0.0001%, and then you let people value their houses at like hundreds of millions of dollars, which is, despite what opening opposition claims, more money than most corporations are willing to pay for a house or to pay someone for like an asset that they own. So you allow these residential owners to set the like value of their house incredibly high at an incredibly low rate, but this still like averages out to like what they would pay anyways. So the government has an incentive to do this because they don't want voters to be mad at them. I think it's fairly simple for them to do. They have the capacity to do this. To not do this would be incredibly ridiculous, and I think any government would immediately be voted out, and then this system would be modified. So these are reasons why it's actually like likely that this is the correct manifestation of the motion. If you are unable to prove that this is a progressive taxation system, like opening government is unable to do, you allow all the opening opposition claims, which say that people just like have their houses consolidated. Note this similar thing can apply to businesses too. Like for small businesses or like businesses that are like pre-profit or businesses that are owned by like a family or make like a lower amount of profit every year, you can just set their tax rate lower so they don't get consolidated by major businesses. I think this is something that is very reasonable and very likely to happen, given that it's probably widely popular and it doesn't completely fuck over your economy. Yeah.
So progressive taxation is usually based on income. Presumably this would have to be some sort of asset system, like based on the value of the asset. And if so, does that not fuck with the whole like, you know, capital like efficiency like?
This is fine. I don't think it fucks with the capital efficiency because you don't have to actually sell your house at like $100 million. You can still put it on the market at like $5 million if you want to sell it. If someone's like willing to buy your house at that rate, then like that's excellent for you. You have like easier market efficiency. And then while you're selling your house, if you want to sell your house for like $100,000 and you have a very low tax rate, you aren't paying much tax on this asset that you're trying to get rid of. So people that are trying to sell their houses have like greater liquidity because they're not paying taxes on an asset that they're trying to get rid of. So you have less consolidation from like toxic assets. You can get rid of toxic assets much more easily while you're selling a house, pay less tax. That sounds pretty great to me. Okay, so this is why it's likely to have a progressive taxation system. This gets rid of most of opening opposition's broad claims. And note that opening government, they like mention this, they say like we'll have different rates and also there's going to be like a soft social norm. I think a strong incentive for government to actually manifest this in a likely way is a much stronger argument than what opening government gives us. Okay, secondly, why do you get better asset use on our side of the house? No, this is also more responsive to opening opposition's claims. They make this differentiation between taxing flow assets and taxing like non-liquid assets. So as taxing flow assets like your profit or your stock, like actually not that good. Well, profit and stock is something that is like an active allocation of capital. If you're trying to like invest in stocks or you are like making profit as a business, profit that will then be reinvested into that business, it's probably bad that the government is taking a chunk out of that because that is money that is otherwise going to be effectively used in further increasing economic productivity. If you are taking away gains from companies or you are making stock trading less efficient, you are inhibiting the efficient allocation of capital in the market. This is something that's not mentioned by opening government. So you get better and more active capital allocation because you're not taxing flow assets that are actively being used to increase value in the economy. Why do you have a better capacity to tax non-liquid assets? Why are these better assets to be taxed? Well, unlike what opening opposition claims, you actually can't offshore these assets, unlike you can with like profits or with stocks. You can offshore a lot of the things on opening opposition side of the house. What you can't offshore is land. Kind of obvious where that one is. You can't offshore capital gains because if you're an American citizen, you're probably not going to give up your American citizenship just to like gain an inheritance. So that thing is also incredibly hard to offshore. But also, unlike what they claim, you cannot offshore IP. Why is this? In order for your IP to be respected, it has to be recognized in the country in which you want it to be protected. So if you want the US Patent Office to respect your IP, you can't just offshore that IP and say it doesn't actually apply in that country. This is not something that opening government mentions. So IP you cannot offshore if you want your IP to be protected. Why does this not harm innovation? Well, if good IP is actually worth it, it will be fine to price it at an incredibly high rate, something that no one else is going to be willing to buy it for because you are actively using it for some good purpose. If the IP is making you profit, you're going to hold on to that asset if like you are still making more revenue than you are taking losses from the taxes that you're paying on this IP. That means you're actually putting it to good work. This is efficient. And I think bad IP should be punished. A lot of companies keep holding on to assets that they aren't actually using. A lot of bad IP, I think it's good if we like sell it off to someone else. This also applies to things other than IP, so expanding the scope of opening government. Things like land. A lot of developers will just buy up a whole bunch of land and maybe they'll develop it one day, but them being slow at developing it or having incredibly slow construction or slow times to actually realize any sort of gains or new buildings, that like stalls the economy. It's not very good that they're holding on to assets that they aren't using, assets that could otherwise be better used. So in assets beyond IP, like holding land, you have much better allocative efficiency because you have to either develop it or sell it because it's not profitable for you to keep it at that rate. So what have I done for you today? I've actually responded to the claims from opening opposition, the claims that entirely take down the opening government case. I filled in the gaps about why you actually get better progressive taxation, why the types of assets that you're taxing are much more valuable and efficient for you to tax, and why you overall just get less people incredibly fucked over and losing their houses. I think people having a place to stay at the end of the night is actually the biggest impact on this round because everyone needs somewhere to live. Most people are homeowners. This is something that you all care incredibly heavily about. For all these reasons, so proud to propose.
Thanks so much, Emma.
Panel, I think what's important about this round is not the incremental differences in how much tax you're able to charge or where that tax is coming from. I think rather what's most impactful about this motion, most harmful, is specifically this ability for people to, or companies and institutions, to buy out assets without explicit consent. We think that this creates the birth of monopolies like you've never seen before. OO starts to tell you that companies have this capacity to do so. We tell you that they don't adequately prove this capacity, nor do they prove the incentive to act on this capacity. These are some points we're going to flesh out more in a vertical extension. Specifically, we're going to tell you why these large companies have a disproportionate will to leverage this ability to buy assets in a way that smaller companies, medium-sized businesses, or even individuals do not have access to. Okay, let's talk a bit about this, and then I'm going to go into thorough refutation of everything we've heard outside government. So, first of all, let's characterize the fact that the value of an asset is actually not identical or symmetrical in all scenarios. Rather, the value of an asset is related to the system in which it exists. This means that the same asset owned by a larger company is likely worth more to that larger company than what it is worth to an individual. A few reasons for this. So, assets likely have more value in the hands of big corporations than in small companies or individuals because of, one, economies of scale. Larger corporations are able to consolidate more assets to be able to do more with them. This means having the same machine do more, having the same asset to do more because they already have other assets required to operate at scale. Second, this means things like distribution channels. If you buy IP from like big pharma, if you're a small pharmaceuticals company, you can only distribute this drug to some extent. If you're a big pharmaceuticals company and have access to insane distribution networks already, you're able to profit a lot more from this IP. This means this IP is worth more to you than to a smaller business. Third is the incentive to become a monopoly and be able to implement predatory pricing. Fourth is the desire to have like packaged goods and being able to upsell pricing from there as well. This means that I think larger businesses have a disproportionate incentive to want to buy up assets and have a disproportionate perception of these assets. This means that rather than just the fact that OO claims that you have the money and can buy these, we tell you specifically that these assets are actually worth more in the eyes of these larger companies, and that means that no matter what face value someone else is willing to assign to that asset, these larger companies will actually perceive it as more valuable. Why can't small and medium businesses then act on these similar desires? I think that large businesses specifically have access to unique buying mechanisms. First, this means debt access. So larger businesses tend to have more credibility because they have existing relationships with debtors. This also is because they have more assets that they can use as collateral. This means they can take on more debt at lower prices to be able to make massive acquisitions of assets. This means you get more of this from larger companies. This enables things such as leveraged buyouts where you're taking on significant levels of debt to acquire massive and massive assets. This is a mechanism to acquire things that only large businesses can access, small businesses cannot access this. Second is on valuation accuracy. I tell you that large businesses can afford things and services such as like investment banks that tell you how much an asset is actually worth once it's integrated into your business system. This is something that a smaller business does not have access to. An investment bank probably charges $5 million, $10 million for an accurate valuation of an asset. This is something that smaller businesses don't have access to. I tell you that these mechanisms are more attractive and more fleshed out than just the fact that these companies probably have more money. I tell you then that this means that large businesses have a disproportionate desire and ability, so both the incentive and the actual function, to be able to buy out assets from other groups. No, actually I'll take opening.
So your analysis shows that as assets are more allocated more efficiently when they go to big companies, because a big company
Let me tell you more about
can use
this.
that
Okay,
asset
so
to
why
produce
is-
more stuff, which is our point.
Why are these assets, when specifically the consolidation into monopolies, bad? 6, 7 reasons for you. 1, I think this raises the prices for consumers. This means you have access to predatory pricing because one company or a select number of companies control supply. This means they can implement incredibly predatory pricing. This looks like because big companies can, and second, because they have big investors, important returns to promise. Big companies do this more than smaller companies. Second is that big companies, monopolies, are likely to lower the quality of services. Because they have this monopoly, they want to take shortcuts to decrease their costs. This means like shorter production cycles, less quality checking, whatnot. We tell that this decrease on the quality of services impacts society. Third, monopolies and consolidated companies are likely to push out possibly valuable innovation from up-and-coming competing startups, smaller businesses. We tell that the value of these smaller businesses and novel ideas they bring is now pushed out by these monopolies and their monopolies' control on the market. Fourth, I think that possibly these large monopolies are more likely to mistreat workers because, again, cost-cutting, they're likely to want to pay less given their incentive to contribute back to their investors. They're also larger, probably less tight-knit culture than like your local bookshop, probably means they're more willing to harm their own employees. Fifth, I think that regulations are insufficient on large companies specifically because these large companies have an insane ability and wealth to lobby the government to have policy in their favor or to have like blind eye turned on them. Sixth, I think that this means that there's less pressure to innovate because when you have a monopoly or an oligopolistic market, you protect these companies from the pressure of innovation or needing to be better and launch better products to compete with your competitors. When you're able to consolidate all of these assets or productions into one big company, you remove this pressure and you enable them to operate as they are without this pressure to continue growing. 7, I think you have fewer jobs in a monopolistic market because in a fragmented market, you have diseconomies of scale. This means that every single company needs like a marketing division, needs a logistics division. This is more jobs. When you consolidate all of this such that you have the same unit of marketing team members marketing all of the products from this larger company, we tell you this compiles jobs because these large companies are so much more efficient. We think this is actually bad for society because fewer jobs, probably bad for the market as a whole. Okay, now let's talk a bit about specifically a few things. Let's talk specifically about this lens applied to everything, but now on PE specifically. I think that you're now enforcing people to have to pay perpetual rent rather than owning an asset. I think specifically this means things that intergenerational assets are now removed. I want to note that homes specifically are likely the first generation of intergenerational wealth. This is how you develop from being like a smaller family into having this intergenerational wealth. We think this ability for companies to buy out your land means you probably have more wealth cycles, PE dynasties, whatnot. This hikes up the cost of living. This makes long-term owning like difficult, more unaffordable, and this impacts the quality of life. I want to frame here that people have lower cash flows because they earn less. They can't just set some kind of high tax rate for themselves. Okay, let's refute closing government. They tell you this big point about how this is better than taxing income. A few things. One, I think the comparative here, income is actually not offshore the way they tell you. You pay income tax to the country where you are incorporated. This means that this concept of offshoring assets, whatnot, doesn't actually apply. Second, I think there's a principle here that your earnings, therefore how much you benefit from society, should correlate to how much you contribute to society. Earnings should correlate to the tax you pay. On OG, they tell you about this macro stability of the government. One, I think you still get the stability from current tax systems without being so predatory on smaller businesses and individuals. Two, I think you enable lobbying from these monopolies that are born. Third, I think that if the government's goal is to protect people's quality of life, incremental changes in stability are probably outweighed by these vast changes in cost of living and competition. So proud to oppose. Thank you.
Thanks so much, Robert.
Okay, Megan? Not too long ago, I was a panel on a debate about a wealth tax or something to this effect. And top half missed what the likely manifestation was, and then CG won by giving the likely manifestation. We're trying to do the same thing here. First, why is it likely to be progressive? The first thing is that this is not a fiat debate, it is this House supports debate. It is a burden on the front half to explain what is the likely manifestation of this, and the goal of this point is just to explain why this is likely to be done in a good way. Notably, the burden that I want to fill from opening government is, one, they sometimes want low tax rates. They talk about how this is a beneficial thing in some instances, but at other points they want to collect a lot of taxes. We explain how they thread this needle by having a progressive tax rate on a bunch of different metrics. The first metric, different asset classes, which I note is mentioned up there, but we have a couple more. Secondly, the individual wealth brackets. I think it's not unreasonable that if you as an individual have one house, you are taxed at a different rate as BlackRock, who presumably has hundreds of millions of houses. But the third thing is that it's not that unlikely the different corporations and companies fall into different tax brackets or have different tax standings, this is not something that's totally implausible. Why is this likely? Firstly, in lots of democratic states, this is just very, very likely for a couple of reasons. The first thing is, the lobbying POI is sort of insufficient versus the mass amount of voting that will happen. Even if you believe big companies will try and push their taxes down, the mass amount of voters will also push to have their taxes relatively low. It's just a relative thing. The second thing is that it creates a welfare strain if you are actually fucking over people and they can no longer live in houses. This is a massive preemptive incentive for governments to do this well. And the third thing is that there's a tax incentive to do this well because you want to make money from the people that you can, and you're not going to make a lot of money from like random people who just own one house. In undemocratic states, I don't know what the margin is, to be totally honest with you, because like I don't know how many people are owning houses in like North Korea. But more importantly, this is like a replacement debate of the taxes that already exist. But even in these states, a lot of the mechanisms I gave above for democratic states already work. The implication of this: 1, we get low tax rates on the people where it matters, the people where they want to be able to value their assets quite highly to protect their houses, to stop BlackRock from buying them up. I'll explain why BlackRock, whether or not you believe them, we can win that. But the second thing is that we enable the point from opening government about valuation being done well. Because there's this problem. It's like, we want to value assets at the amount that they are worth to us. But this is sort of problematic for things like housing, where lots of people have sunk tons and tons of money into their housing and then don't have the money left over, as is astutely pointed out by opening opposition, to cover the rate of the tax that they would have to pay if they valued it at the true value. The progressive way of doing this is actually the mechanism by which you get that, and also you get the margin on tax collection. The second part of our point is just a whole bunch of vertical extensions. The first thing, it is extremely important to note that there is not just one company in the world. Even if there are 2 big companies in the world, you have to compete to keep your asset prices relatively high to stop the other company from stealing them. The implication of this is that you're being actively taxed on all of the assets that you have, and this is why the response about private companies being evil and just holding up assets and not really doing anything with them doesn't work, because you are being taxed at a higher rate than OG proves, and you have to keep it at a higher value to compete with other companies who might otherwise steal that asset and make it productive. This means that you are actually going to use the asset to the best of its abilities, at least more on a margin than in the status quo. The second thing is that this offshoring clash, I think, is quite silly, but to be honest, we've just refuted the analysis from OO about what you can offshore, and particularly the IP thing. The last thing is something I want to weigh pretty highly on innovation. It is probably a good thing if the IP market is more liquid. Lots and lots of people put random patents on shit and then just sit on it and don't really do anything with it. If somebody comes along and thinks that they can do better with that patent, they can make more money with it, they should be able to buy it and use it more. And if you want to block off your intellectual property from the rest of the world, you should have a pretty damn good reason for doing it. And if you have a pretty damn good reason for doing it, then you can set the price relatively high, make a lot of money, and pay off those taxes. It is better to have liquidity in this market. The claims about consolidation of IP are half-baked. I don't really think they go anywhere. So, the weighing then versus open government is relatively clear. The margin on tax collection that they prove, I think, is relatively small. They knife themselves when they talk about how small the rates are going to be, and the progressive action fixes this. The second thing is that the fees of auditing seem somewhat marginal. I don't know the extent to which it's easier to have people self-evaluating their assets, and then you having to audit that occasionally. I don't really know what the margin is on that point. The second thing is that the likely manifestation is a pretty important missing burden that we filled in. And the third point is that the allocation point that they provided is vulnerable to a lot of the responses that came up from OO and CO. I hope we filled that gap. Responding then quickly to opening opposition, I will integrate rebuttal to CO before that OO.
The premise of your extension is asset optimization. The only issue with that, as we identified, was that because of corporate consolidation, there is an incentive on our side to crowd out any competition, thereby reducing innovation, therefore you reduce asset optimization.
Okay, a couple of things. The first thing is, I'm not really sure the extent to which you do get this consolidation and this monopolization. So, for example, if I have a whole bunch of grocery chains, I'm not totally sure what the thing you're buying is from these other grocery chains that makes it so that there are suddenly only one grocery chain. Even if you do believe that this is coming from like the land or maybe the apple slicing machine that they have, lots of the big firms that do this, lots of the big conglomerates like BlackRock or like Kellogg's, I guess, have sub-firms that are not necessarily competing as they would in a perfectly competitive market, but they're not a complete monopoly. It's very rare that we get these like absolute monolithic things, and I think, again, just absent more analysis on like what is actually being consolidated, I don't really know how clear this point is. The second thing is that I don't think consolidation is in abstract bad if you believe that the assets are going to be used better. Again, analysis that we've provided that is not really clearly coming out of the opposition benches. We've already flipped the IP thing. The most interesting claim coming from opening opposition is on information asymmetry. The problem is I'm just unsure the margin to which this is true. For example, if BlackRock knows that your house is worth like $100 million, but you only think it's $10 million, but BlackRock buys your house from you for $10 million, maybe you could have gotten $100 million, but the fact that you got $10 million at all is pretty fucking good. And especially if you believe that BlackRock is going to buy all the houses, and you believe that the progressive tax system is in effect as the way we describe it, then people are able to value their houses at a way that they're going to make a lot of money from it if they want to do that, or they can value it sufficiently highly, because BlackRock doesn't have infinite money to buy your house, that they won't be able to get it. Liquidity in the market's also broadly a good thing. Liquidity is good for stability. It means that assets aren't holed up. It's harder to create bubbles. It's easier to track what's happening in the market. It's easier to see which firms are going to do well and which firms are going to do poorly. This allows for more efficient capital allocation. The CO vertical, I'm not sure how compelling it is. I'm sorry, guys. The thing that they talk about is that the asset value is relative, but this sort of feeds into the analysis, which is that big firms can use these assets better. And since they're forced to use these assets better to make up for the taxes that they have to pay to stay competitive, I don't really know whether it's such a bad thing. The analysis about monopolies being bad. Firstly, I do think it's important to note that you can break monopolies, even if there's just one other firm in the market. This is vastly reduces the extent to which this is all true. But secondly, I think in lots of places, governments have sufficient capacity and incentive, if there is truly a monopoly, to buy up a whole bunch of assets that a company might have to stop them from doing this. Lots of countries are generally richer than even the biggest companies in those places. Again, I'm not sure what they're buying up to make this a sufficient monopoly. And again, I think there's still lots of sub-competition, even under the biggest conglomerates. What then ought you weigh? We're beating opening government because we fill in two very important burdens. One, what this is likely to look like, and two, why the capital is likely to be allocated efficiently. Given this, I think we are doing a much better job than the broad claims from OO and CO, which is that consolidation is bad. Consolidation isn't always bad. So proud.
Thanks so much, Opit.
Okay, so the point that my partner has made here is that the long-term negative impact created through these monopolies that are certain to actually be invoked is much more detrimental to these economies than any sort of short-term value gain that the government side here has proposed in terms of incremental tax revenue gains or anything like that. And these monopolies are certain to happen. The reason for this is because there's been a constant debate here that PE companies, for example, may not see value in purchasing properties, may not see value in purchasing a residential property, let's say, for 10 times what its owner actually evaluates it as. But I'm here to prove that they actually will. That there is an extreme incentive here for companies to actually consolidate this market, and they will do so. Additionally, beyond that, I'm going to talk a little bit about how these monopolies will happen and how they will affect these economies long term. So to start off, the government side here has made a claim that it's not profitable for these companies to just buy a residential property at 10 times the price at which the owner evaluates it as. Because it's not profitable to just buy this land and then hold it, or even just to buy this land and develop it later to turn it into a manufacturing facility. And I'm here to say that this asset that we're talking about, this real estate asset, is actually one of the only types of assets in the world that actually appreciates over time, whether you do anything to it or not. So for any sort of company that's looking to purchase land, it is actually a profitable decision for them in itself to purchase any sort of real estate land. Beyond that, I'd like to call an example of the Hong Kong housing crisis. This is a perfect example of construction monopolies that have purchased land and done absolutely nothing to it, but have created a monopoly on the housing market where there is now a limited amount of housing available for the Hong Kong people because there are construction companies that have simply purchased land and done nothing with it and are just holding this land unavailable for the people to use.
Do antitrust laws no longer exist on your side of the house? There are existing government regulations against the consolidation of industries into monopolies. That doesn't change.
Yes, but under this new proposed law, we are saying that there is a price that basically there is a purchase price for anybody if you can meet it. And in these scenarios, the only people that are able to meet it is the consolidation companies, is these big companies. So while those existing laws are in place, this new tax rule kind of overrules that. It's saying that if you're able to meet that purchase price, you can purchase it. That's the whole motion here that we are arguing. So because that exists, this will happen. Companies will purchase it, and they will consolidate. They will consolidate the industries. Another key point here that the government has made is that intellectual property, this type of asset, will be used for good if it is actually valuable, and because of that, it can be priced high. And I'm here to say that intellectual property, if it is actually valuable, let's say something in the pharmaceutical industry that is helping save lives, that is good. That is actually valuable, but it's not used for good a lot of the times. Look at various different patents. Look at patents on various different pharmaceutical products, for example, at the moment. Companies have already started to monopolize this. For things like EpiPen, for example, where it's the only solution right now for a lot of people with diabetic conditions, it is currently a monopoly. And what's going to happen if an even more powerful company can come in and buy this and own it forever simply because they are the only ones that have the purchasing power over this? There will never be any sort of democracy on any of these intellectual property pieces like EpiPens that could do greater good for society. Beyond that, I'd like to challenge a little bit more about what I'd like to just state here that the negative harm caused from these monopolies long term on people can look at things like changing the entire buying and selling processes of an entire economy. You're looking at things like the cost of housing, of course, being raised just because there's less property available for residential people in general, but also just the cost of everything going up as well. If the major crutches of your economy, things like real estate and intellectual property and everything like this, are going up, everything else will be raised as well. The overall look on the economy, the overall cost of living for people in this economy will be way greater than any sort of benefits gained from these incremental tax revenue gains that the opening government mentioned here. If you're looking at maybe a 10% gain in incremental tax over year, that's nothing compared to a 50% increase in cost of living for people.
Point of information.
Yeah.
So you just made those numbers up, so
Yeah.
that's not weighing. But I do want to point out that if a PE company can value your home at like 10 times what you can value it, shouldn't they obviously be allowed to buy it and then rent it to 10 times more people than your family houses, and thus increase the housing supply? Like, isn't that a perfect illustration of
Yes,
how it would work?
that is a good example of something they could do. And I'm saying here that is something they won't do. A private equity company, they could purchase your land at a 10 times premium to what you valued it, and they could gain way more than using your land simply for residential purposes again. Residential income, earning rent from tenants, is not the biggest value gain you can get from a piece of land. You could simply turn it into a manufacturing facility. You could earn 100 times more than what you purchased it for. There are infinite more ways for a private equity company or any sort of large conglomeration to actually repurpose your land and use it. They don't care about what the existing people on that land are doing. They don't care at what price they bought it from you for. Simply because, like my partner mentioned, the value that they can gain out of this land is way more than any value that a consumer could gain from it, from any sort of consumer purposes like living on it. Another point here that the opposition made is that complete monopolies don't exist right now. They use Apple as an example. Apple is kind of dominating this personal electronics space in North America, at least, but they're not a complete monopoly. And I'm here to say that, yes, that exists because of our corporate tax laws, because Apple doesn't have the ability right now to buy out all the other competitors in the space, to buy out their land, to buy out their storefronts, so that they can put their Apple stores in every single location across North America instead. The only reason why these large dominating companies right now in North America are not full monopolies are because of our existing corporate tax laws. And if we were to implement something like the government's proposed tax laws, this would be completely changed and full monopolies would occur. So, thank you.
Great, thanks so much. We'll get you in.
Still looking, right?
Yeah, it's okay.
Can I stop this? Yeah.
Okay. So I'll just give the call. I'll give the reasoning. We obviously can't cover everything. Usually we didn't cover it. I didn't think it was super important. Just let me know if there's something I'm missing if you want to talk about it. Obviously, you can also approach me or any of the panelists for feedback. I have plenty of it, or questions as well, or you have about the OA. we came to unanimous call. The call that we came to is as follows. We give the first to closing government, the second to closing opposition, the third to opening opposition, and the fourth, unfortunately, to opening government. So it's CG, CO, OO, OG. I actually think like almost all the splits are pretty close, honestly. So let me just delve right into top half. So OG's argumentation is this. The first is that you're able to increase a fair bit of tax revenue, and they do give some reasons that nobody really responds to directly as to why government revenue is good, in terms of how it's often more equitably distributed, as governments often tax it in progressive ways, and around how you often can have, you need really long-term stable investments macroeconomically in that way. And then the reasons as to why you're able to collect more taxes are the following. The first is you have far lower collection costs, right? So you just display all the information directly instead of like needing to go through very expensive auditing processes, which also involves a lot of loopholes where it's easy to cheat. And then there's a second argument about that allocation of capital efficiency, which is basically like SMEs may often not have public information, you may often have like higher transaction costs, and so you have underpriced assets. And what that then means is that you don't always then allocate it, or the right company isn't able to buy the product at the right asset at the right time, whereas on sidecar we're able to do that a lot more because they declare the true value of what they own. OO's broad push in terms of positive argumentation is on corporate consolidation. I will talk about that positive argument in a bit, but I just want to note first, like, to what extent do we credit these OG arguments? Firstly, on like, I think I'll first talk about the allocation of capital in many instances. So O have like a couple of like nitpicks about this, over like the extent to which you're able to do things like, allocation of efficient capital, right? I think the simplest one that I have, or the opening opposition point out is, in areas such as like housing, the capital, like the allocation of capital efficiency doesn't seem half as important as the fact that many times individuals are just not going to be able to have a house because it's literally sold without their consent. The way DPM kind of comes back to this is by saying you can have different prices or like rates of fixed assets. But I think the DLO response here is correct, which is that you can't always set a very high price because the problem is that you have to pay yearly taxes on it, which you often cannot afford. And so the problem thereby is that for a lot of people, they're just going to lose their houses to like a lot of really like richer companies in many instances. Whereas on the comparative, either A, many people they just choose to not sell, or B, at least like the price that they have it at could be like comparatively higher, but they don't pay the same kind of taxes. So like they don't face the same like cost of like having a high price for their home. So the implication is that at least in some instances, opening government is going to lose houses that you do not lose in opening opposition. Secondly, with regards to corporate consolidation, which to be fair, I think is what allocative efficiency is really targeting, right? So the opening opposition argument on allocative efficiency, on corporate consolidation is, corporations have strong incentives to indulge in like a lot of basically buy up a bunch of smaller companies, and that they are going to be able to do it far easier, I suppose, because they have the ability and the capacity to do it. But now they can just buy like any price or like any public, any SME that's out there, if they find the asset value a little bit higher. I will note, this is a bit tricky sometimes as an argument to credit because O don't give me a very clear counterfactual, which is like why normally you are not able to like buy up a lot of these anyways. But opening government never makes that explicit response, and implicitly I think opening opposition is saying that at least in the comparative, if you don't want to sell your thing to a big company, you are just able to explicitly say like I don't want to sell it regardless of the price you're offering. So there is some margin over it, even if how much the margin is here. Now, the answer that OG had is like, in many instances this might be good, because sometimes like having corporate consolidation may genuinely be helpful if you are able to utilize that asset a lot more efficiently, right? You're able to get a lot more growth, you're able to get a lot more productivity over there. So, it's not actually then super clear which version is the more true characterization. Opening opposition may be correct. In some instances, small companies provide valuable, innovative products, and those innovative products are just sunk because big companies buy them up. It could also be true, however, that in sometimes big companies buying them up is actually good because they're able to just utilize those same things a lot more efficiently, have better economies of scale. So, the argument on housing has a much larger margin of change than the argument on whether allocative efficiency of allocating assets efficiently is more likely than buying up useful companies that could have provided good products, but now are not able to do so. So O have a strong margin on housing, even if the clash on corporate products itself is like somewhat marginal. OG then do have the argument on like, tax collections and that sort of stuff, but I think it's a little unclear, like whether this is very meaningful. So opening opposition's responses to this on like tax revenue is like sort of like, there could be many ways of how like this process of tax collection could actually be a lot more complicated because people will now fight over which asset falls into which class, for example, or something like that, right? And it's not immediately apparent that it is even terribly meaningful because some companies may always have like a huge money, like a large amount of money for things like lawyers and that sort of stuff. So they can always screw up or gummy up the works, which means that the cost for governments to actually like get this revenue from them could still be somewhat high. But I think our feeling is that even if we give opening government some credit for tax collection, the argument on like housing just seems like a more intense and immediate impact to a lot of people who are not going to be able to have their houses that they otherwise would be able to do so. This probably then ends up being why opening opposition on balance is ahead of OG. There is also, I think, some other stuff O have around like IP laws in like the DLO speech, so stuff like IP being taxed at like a bad rate, often like basically like I think the idea is something like IP when it's not taxed at a particularly good rate. Basically, if you set up like this Harberger tax on IP laws, then it may disadvantage innovation for many companies because they just fear that their IP could just be taken away by like foreign competition very significantly. That's also probably that's another mechanism on corporate stuff. So on balance, then our feeling is that OG do get some margin on tax collection. OG perhaps don't get the margin on allocative efficiency they wanted to. And if I had to contrast that against OO's margin on housing, OO seems to be ahead on how intense and important that impact is. I want to now bring in closing government here. Closing government does maybe two things. The first thing closing government does is like a scoping out kind of argument, which is that the way this is likely to be done is progressive taxation. So they give a couple of reasons for it in terms of how governments do not want to screw over a large number of individuals in many instances, so they want to set up low rates for certain types of things. They also are likely to do this because in many countries, since it already exists in the status quo, it is a good set of incentive they want to push like onto comparative anyways. And then they explain how this will be done, right? So you will set a rate that's pretty low for like basic residential housing, and that means people can choose to value it at a really high rate when they don't want to sell it, and then when they do want to sell it, they can just lower the price of the house or the asset in some instances, and that's going to then allow them to sell it. So it does seem to avoid what we think as the panel is probably like one of the strongest arguments, or like the strongest or most immediately intense impact that opening opposition has. I will also note closing government have like maybe two-ish additional reasons on how this is a better usage of assets. So one which is like an MG push around how taxing non-liquid assets are better because it is harder to offshore them. So it's hard to offshore IP, it's hard to offshore like literal like land, but it's actually a lot easier to offshore things like profits and stocks and that sort of stuff like that. So at least on balance, you're going to get a larger percentage of the gains that you make when you do tax them properly. And then secondly, which is that like you also incentivize them to like productively use that asset a lot more. So instead of just like letting it stay and accumulate or increase in price, that piece of land, you have to like productively use that land to make money from it, or just run the risk that it's just going to be like bought up by someone else in some instances. So there are independent reasons CG have as to why like this is a good thing to do, and they do a lot of scoping out as to why this isn't going to be progressive, as to why this isn't going to like lead to housing crises. I also want to note, and this will probably become important when I bring in CO, CG thereby also have a much stronger set of responses on why monopolization or consolidation aren't going to happen. There are two types of things to note out over here. So the first is the idea that since you're able to, anyways decide the price at which you are pricing that asset, and since you can do that without any fear of, your tax rate really affecting you, because if you're like a poorer person, you're going to have a very low tax rate, which means you can just price it really high and pay minimal amounts of yearly taxes on it, so that means on balance you can still keep it. It already mitigates a significant percentage of the argument O was arguing on consolidation, because I think the argument also works with corporate consolidation, right? Like smaller, medium-sized enterprises can choose to just value their price of their assets really high, and they will pay comparatively smaller amounts of taxes as compared to say what a big company would have been paying for it. Which means on balance then, they can still afford to do this. So that's one reason why monopolization doesn't happen as much. The second thing, as I will note, is a good government response, which is like, even if there is increasing corporatization, like there is increasing consolidation, it's not clear it ever reaches the stage of monopoly. So the response is just like, even if it's going to be like an oligopoly, like even if they consolidate into 2 or 3 big companies instead of one company, then immediately a lot of the benefits of innovation can still accrue, because you still have the incentive to compete with each other to try and get a better product, to try and ensure your assets aren't bought up by someone else. Which means that it's also a good piece of mitigation towards what the extent of those impacts are with corporate consolidation in many ways. So on balance then, CG is able to mitigate the extent to which corporate consolidation accrues. They're strongly able to almost entirely beat, I would say like probably like to like 95%, like how significant the housing harms are. And then they just have independent reasons why this is like a useful asset to tax, and it ensures companies are going to be a bit more productive where they otherwise wouldn't be. So that on balance explains why O's harms accrue very infrequently or are not very important as compared to CG's additional benefits. Even if the benefits are like not huge, they are still there and standing because they have a larger margin of change. So that's sort of why CG is ahead of O. And that also, I think, and hopefully it's also explaining why I said ahead of OG, because they're able to I guess the way I would put it is there are big barriers, and CG is weighing why those barriers are not existent. Like they're able to explain why allocative efficiency can happen a lot better by just on balance weighing why these benefits accrue far more frequently than the harms of housing or the harms of corporate consolidation. I want to bring in closing opposition. So closing opposition's extension has 2-ish components, I think. The first component is sort of an incentive analysis on why big companies always choose to value assets a lot higher than individuals who own those assets, or I guess small companies who own those assets. They give a lot of reasons around economies of scale and IP and that sort of stuff. And then they also explain additionally why smaller businesses often aren't able to do this, because big businesses just have a lot more money, a lot more debt with which they can do leverage buyouts and that sort of stuff. This piece of analysis, I think, is not I think it's credited, but we're not certain it is immediately important to the round. Opening opposition already have analysis on incentives, even if it isn't as deeply detailed as CO, right? The O analysis is very simple. Companies want to expand as maximally as they possibly can, which is the reason why they want to buy up as many companies as they possibly can. There is maybe a margin for CO here because they take the burden of even if the price of the asset is 2 times or 3 times higher, you would still want to buy it anyways because of the long-term benefits you can accrue from it. But I'm not certain, despite their attempts to say it, that this actually works as easily for 10 times. So for example, I may buy that there could be benefits in the long run, but I'm not sure those benefits are more than a price that is 10 times higher today. So there is a scaling issue over here, which is basically, yeah, maybe if you increase the price, the company may still want to buy it. But I'm not sure if they increase it to the level that closing government and opening government are you able to do this well. The second piece of extension that CO does provide is a significantly large number of reasons on why consolidation is bad. Right, so there's a lot of stuff on raising prices, on lowering quality of services, on mistreating workers, on lobbying, on innovation and fewer jobs in that industry and that sort of stuff. This is, I think, better than opening opposition. As I've hinted at, I think we're actually at times a little struggling to understand why the harm of consolidation is so bad and over, right? So the direct impacts opening opposition give is small companies could have valuable or innovative products, which we're already unsure on the margin of, because maybe that's true when small companies have innovative products, but if, as OG could sometimes be correct, the big companies give great economies of scale, then I'm not sure that innovation is valuable. There's a secondary thing out of LO on debt bubbles, you have a ton of debt when you're buying up a lot of these small companies, and that's bad. I think it's there, but it's we don't know how to weigh it. It's not brought up again really in DLO, and we're not sure how bad this debt gets in terms of is it going to bankrupt those companies? How badly is it going to lower investor confidence in them? It's sort of a bit unclear. CO, I think, give a lot more reasons just why consolidation in and of itself is quite bad. And I think we do credit them quite substantially, because these reasons explain why it is a really, really serious problem that we ought to resolve for. And it also explains why, even if they may theoretically have some benefits around economies of scale, why they theoretically could provide some better, why they have the capacity to provide better, products and that sort of stuff, they are just very, very unlikely to do it. Because if once they do become that monopoly, they do have the ability to just like, push out prices, increase prices, mistreat workers a lot more, reduce the number of jobs in that industry, when they do fragment. Then on balance, it does seem to be like, maybe they have some ability to provide like better products, but in the long run, like they just have so many ways of like making lives much worse for the average person in the country and for the average business. So the impacting gets a lot of credit from us in just explaining why consolidation is bad. This is why they are then ahead of opening opposition, and I think it is also a reason why it is ahead of opening government. Because opening government's argument on allocative efficiency or on tax collection is comparatively like less impacted and seems less meaningful or important to us as compared to the number of ways is how this closing opposition impact unfolds. Why do we think it's still insufficient as compared to closing government, however? Our feeling, I think, is just that even though the impacting is pretty good, I feel there isn't sufficient response in explaining how much consolidation we are going to be getting. And that's because closing government still suggests that you can have the prices be extremely high when you don't want to sell, and that even if you have more consolidation, it never reaches the level of a monopoly. And I think closing opposition do need a lot of the impacts on monopolies to accrue, not merely oligopolies, because a lot of the harms around like fewer jobs or mistreating workers or like predatory pricing is contingent on you not having a meaningful competitor who can just underbid you in terms of price, who can just still pull out a evaluated product, who can still hire your own workers when you're mistreating them. So basically, there's not an acknowledgement or a substantial response to how closing government is scoping out how frequent closing opposition's harms are happening. Which means on balance, we think that maybe there are harms of monopolies, and when they do accrue, they're really bad, but we're not convinced they accrue frequently enough with this specific motion in place. So on balance then, closing government's impacts around just like having more, better ways of taxing them or like making these assets more efficient, seem to accrue a little bit more frequently, even when they are lower intensity than closing opposition, because closing government have explicitly responded to why, monopolies or monopolies isn't going to be like as big a serious a problem. So even though closing opposition do a lot more impacting than OO, and that's credited, the impacts don't accrue as frequently as closing government benefits, which is why it's still used to CG. Hope that makes sense. Let me know if you have any questions or things you feel have misunderstood or you want feedback. But otherwise, yeah, congrats, congratulations.
Thank you so much.
Thank you.